Hello and welcome back to Simple Money Podcast, Canada's own personal finance podcast that covers those personal finance questions that are important to you and your family. I'm your host, Matthew Sewick, also known as the Friendly Financial Coach. So now that the post-election dust has started to settle, we are now able to evaluate the winning party's major election promises to see how they will affect your household's finances. No matter where your political allegiances lay, these future policy promises will affect you and your family. Before we jump into an oversized list, we need to first remember that all these proposed policies are just promises that need to be passed. This means that the current Liberal minority government will need to gain support from another party, which is obviously going to be very challenging and may lead to some of these promises being modified from their current form. This list of promises ranges from increased child benefits to reduced cell phone costs, to the introduction of new data rights for Canadians, and more. Overall, the provided details are very general, and timelines are also often not included. So to kick off the promises, we start with a popular one, cutting cell phone bills. As the promise currently stands, bills are expected to be cut by 25% within 2 years. Cell phones are one of the largest recurring expenses for households, and a cut will help reduce regular monthly expenses. These savings can then be used to pay for other expenses, or they can be used to help someone achieve their financial goals. This proposal also raises many questions, including if the bill reductions will apply to previous contracts or just new plans. It may also be a case of a special plan being offered, like the rules that were offered through the general TV packages at reduced costs. This program was passed a few years ago. Either way, expect a strong lobby effort by the telecommunications companies in the future, as this proposal would reduce their revenue. Another big change is that federal taxes are planned to be cut for earnings under $15,000. This measure would be implemented by increasing the federal basic personal tax credit amount. This tax credit currently stands at $12,069, so it would be an increase of just under $3,000. This tax credit would reduce federal taxes for all Canadians that earn above the current basic personal tax credit amount, and is estimated to save households an approximate $600 a year. Provincial governments also offer a similar tax credit that differs in amounts across the country. This amount reduces the provincial tax component and will not be affected by these federal changes. Taxes will also be going up on luxury items that are currently over $100,000. And include things like cars, boats, and personal aircraft. This 10% tax obviously targets wealthy households that have more resources to buy luxury items. So moving away from taxes, another interesting change is the implementation of new data rights. This new charter will include a series of online rights and protections for your digital identity and data. This new program will be overseen and enforced by a privacy commissioner. Rights that were included in the platform are ways to withdraw, remove, and erase basic personal data from a platform. You'll also have data portability, which means that you can move your data from one platform to another. Also included is that you will know how your personal data is being used, including who has access, who is using it, and the ability to withdraw consent. The federal minimum wage will also be increasing to $15 per hour and be annually adjusted with inflation. This minimum wage applies to federally regulated industries. And then topping off the general section, we also see the introduction of a new federal family holiday. Another area that has a lot of new benefits are for new parents. The Canada Child Benefit is expected to increase by 10%, up to $1,000 annually for children under the age of 1. This non-taxable benefit bump will be extremely helpful in the first year when a parent is often out of the workforce on maternity or parental leave. Another very big pledge is the elimination of federal taxes on maternity and parental leave. This means that households will have larger payments when they're on leave, which will obviously help out when income is typically decreased and expenses have increased. For parents that do not qualify for EI-based leaves, the government also has proposed that they will receive benefits for the first year of a child's life, offering more stability for households that would likely be more financially vulnerable. Other benefits for parents include 15 weeks off for adoptive parents. The disability child benefit will also be doubled by an extra tax-free $2,800 a year. There will be a creation of 25,000 new childcare spots, and aftercare and before care fees will be reduced by 10%. Students also have quite a few new perks in the platform. Repayment will begin on federal student loan portions 2 years after graduation. This is an extension from the current 6-month grace period. During this period, there will also be no interest charged on the federal portion of the student debt. The repayment assistance plan is also going through modifications. This special feature on government student debt allows recipients to reduce loan payments, sometimes to even zero, when a household income falls below a certain threshold. The current annual threshold is $25,000 for one person, and this will be increasing to $35,000. This means that graduates will no longer be obliged to make payments unless their income is above that amount, even if the grace period is over. To qualify for these benefits, graduates need to submit paperwork and reapply every 6 months. It's also proposed that new parents with student debt will be able to pause payments until the child that they have turns 5. During this period, the federal portion will also accrue no interest. So moving on to promises for retirees, it's proposed that old age security will increase by 10% when the receiver hits 75, and CPP survivor benefits will increase by 25%. EI sickness benefits will also increase from 15 weeks to 26, and a new program called Career Insurance Benefits will help assist those that have been working in a business for 5 years or more and are laid off due to a business closure. This new program will pay 20% for the first year and 10% for the subsequent year after EI payments cease. The new first-time homebuyer incentive will also be changing. The cap will be bumped up to $800,000 for select large cities in Canada. In the previous form, the cap was not sufficient to help individuals that were buying in large markets. And finally, we see a new 10% home vacancy tax charged on empty homes owned by non-Canadians that do not live in Canada. So that's it for the promises in the platform. I would love to hear what you think. Either comment or send me an email at info@ffcoach.ca, or you can also find me on Twitter at @F_F coach. Take care and talk to you soon.